Welcome back, my friends. Today we're getting into another video about the San Diego real estate market, let you know what's happening. And as always, in these past few videos, these past few weeks, we've been getting some comments down below about areas you guys want us to cover, whether it be market updates, whether it be questions about just real estate in general. Drop it down below because in this channel, we make videos for you guys. But we got another comment. Somebody wanted to know, I am selling my house in this area. I'm moving to another area of San Diego. And it's super important to know what's happening in the market, especially if you are selling in one location and moving to a different area of San Diego, where maybe one area is more of a seller's market, one area is more of a buyer's market. And that's what we have today. So it could affect timing, it could affect the price of your home, it could affect a few different things. Now, it's not all doom and gloom. We'll get into the numbers here. And at the end, we're going to give you some ideas if you are selling your home and buying another home. How do you go about doing that? There's a few different options. And like I said, if you guys do want us to make a specific video, whatever you're thinking, drop it down below and also down in the description. As a quick reminder, I'm Chris Erickson. We got a real estate crew right here in San Diego, and we want you guys to reach out. All that info is right below. We love it. Hit us up. We got your back when making the move here in San Diego. Let's jump into it. And so the comments popping up right now: buying in 92117, that Claremont area, selling in 92103, that Hillcrest / Mission Hills area. What's the difference? And in this situation, it's not that far of a move, but they are different markets right now. So what's going on? Let's jump into it. So we're going to start on the sales side, selling in 92103. Always start with the market action index. How's the market? Now, this gauge is just a number, but it's out of 100, in 100 being the most competitive market for buyers out there. Super heavy sellers market. 0 being it's a buyer's market. There's 1,000 homes on the market. You can choose whatever one you want. There's not going to be any competition. We haven't seen it drop under this 30 mark where that kind of starts into that buyer's market for a long time. We did start getting close. This is last month on the bottom. This is this month right now. So we're still in a seller's market, and we did have a little jump up. Now that's typical for this time of year. We're coming into that typical buying season here in San Diego. The number of homes out there for sale is still somewhat limited. Even with higher interest rates out there, there's still a bunch of buyers out there. So they did see a little bit of a jump in the market action index. So home sales continue to outstrip supply, and the market action index has been moving higher for several weeks. And these are all for houses. So I don't know if the comment was for homes or for condos, but condos is basically about the same. Market action index actually dropped a little bit this month. So, but in that same range. Now hopping into houses just to see the market action index over time, where have we been in the past? We're just going to pop on this 90-day average here. So we have seen, this is that little jump we saw going up to about 47. Where were we last year? Now last year around this time, we were sitting around 55. So it was a little bit more of a seller's market last year. And that continues as we go to the prior year and to the prior year. So in this time in 2021, it was one of the most competitive markets that we've seen in a long time. We're not quite there yet, but it is still in that seller's market, meaning sellers have the upper hand. But we'll compare it to the other city, that Claremont area, and show you where we're at. Now in 92117, the market action index here, you can see we're much higher on that market action index, indicating that this area has a lot more demand, has less homes on the market, causing it to be a heavy seller's market. Not much change from last month to this month, but compared to 92103, you can see it is significantly higher. While the market action index shows some strengthening in the past few weeks, prices have settled into a bit of a plateau. So in past years, when the market action index has been around this mark, we've seen prices jump significantly. So 2021, 2022, 2023. This year, it's kind of peaked out a little bit. So we're seeing a little bit of gains in prices, but not as significant as we had in years past. And then once again, the market action index over the years, we're gonna pop out. You can see there was a lot more peaking in that 100 over these past few years, but 90-day average, you can see actually we dropped down slightly, but not a ton. But still, compared to last year, we're a little bit lower than last year and the previous year and 2021. So the first indicator we're going to take a look at is new listings. How many new homes are coming on the market? You can see it's relatively the same. Both have been rising every month. The number of new listings has been going up since the beginning of the year. Now here's the first differentiator: active listings. The number of active listings is more than double in Mission Hills. So that just means there's about relatively the same amount of new listings coming on, but there's double the amount of current listings on the market. So it's just indicating there's less buyers in that market. So it has been able to accumulate a few more listings as opposed to Claremont that has been seeing a downtrend. So right now, May 2024, there was 81 active listings in Mission Hills as opposed to 37 in Claremont Mesa. And that story continues here. What is the average days on market? Now, in a more competitive market, you're gonna see this number lower because it means homes are hitting the market, they're selling quicker, there's more buyers out there, maybe you're getting multiple offers in certain situations. So this isn't all doom and gloom for 92103 though. The current average market time is only 20 days as compared to 9 days in Claremont Mesa. So homes are taking about twice as long, if you put it that way, twice as long to sell, but it's still only taking about 3 weeks as opposed to just about a week and a half in Claremont. So that goes to that timing issue. Like, how long is it actually gonna take you to sell your house? And then how quickly do you need to get on new homes that are coming on the market in the market that you're buying? And one other number that will indicate, are we getting multiple offers, are offers going above and beyond list price. Here is the percent of original list price received. So how far above or how far below did they get from their list price? You can see in Claremont Mesa, this number is right now 103.5%. That goes to show us that there is that competition out there. Homes out there are getting multiple offers, going above and beyond what the list price was. That's how that happens, where you have multiple people trying to go after the same property. Well, you're gonna pay a little bit more if you do want to secure that property. While in Mission Hills, you're looking about 98.6%. So it's still close to that 100%, but it's definitely not as competitive as the Claremont market. And so what if you're in the situation where you are selling in one market, you're gonna buy in another market? Like, what are your options as a seller? One of the first options that you could have is to sell your house first and buy the other house later. So sell your house, get your proceeds. Few advantages of this is you are going to know how much your house sold for and what your net proceeds were. So you know exactly what amount you'll be able to put down on your new property, and you won't have the stress of having to sell your current property. You're also going to avoid having two mortgages at the same time. So if you decide to do the next option, you are going to have two mortgages. So there is some risk in that. The cons of this is you're going to have to find some temporary housing, whether it be Airbnb, something short-term, stay at a friend's house while you're searching for your new home. But depending on when this is, you also might run into a change in the market. So could be in favor. Maybe it could switch to a little bit more of a buyer's market, but it also could switch to a little bit more of a seller's market. In that case, when you are the buyer, you'd rather have it skew a little bit towards a buyer's market. The next option is to buy the next home first and then sell your current home later. Benefits of this, you don't have that interim space where you do have to go find a rental or stay with a friend or anything like that. And the risks here are, yes, then at this point, you're gonna be carrying those two mortgages. And in the case that, let's say the market did change and the market that you're selling your home in, it's taking a little bit longer, you're gonna have a little bit more of those carrying costs for your mortgage, for electrical, for just everything else that goes on with that house. That's just one of the biggest risks of this option. Option 3 is gonna be a simultaneous close. So the benefit is going to be you're going to be closing on both homes at the same time. So let's say you put your home on the market and you get it into escrow contingent on finding a replacement property. You could have that timeline negotiated with the buyers, 17, 21, whatever kind of days it might be. But during that time, you're going to be searching for your new home. Now you're going to secure that new home and you're going to line up the dates on the home you are buying with the closing date on your current home so that they are closing at the same time. Now in this option, you are going to have a little bit of stress as far as lining up timelines and just making sure everything does go according to plan, because at this time, you're going to have to close both properties at the same time and then basically just transfer money from one property to the other, or whatever your down payment, whatever your new loan will be, onto that new property. But in this option, you can do this all at the same time. Another option is looking for homes contingent on selling your current home. So you get your pre-approval for the new home, you can go search homes, you can write offers and agree in the offer that you will continue with that contract as long as your current home sells. Now the contingency for that is once again negotiated between you and the other seller. And it could be, timelines could vary. It really depends on what's going to work out. But maybe your home is in escrow already. You're like a few days away from closing. You could have a super short contingency and then continue with the purchase of that new home, potentially even having a rent back on your current home. So let's say you close on that, you had a 30-day rent back. During that other time, you found your new home, you have a shorter escrow, you get in there, get everything moved out. Once again, a few moving parts in there. but it is doable. But one of the downsides is this offer, as you are presenting this offer, especially going into a market that's a heavy seller's market, it could hinder your ability to secure that home, because if the other offers on that property are not contingent, then your offer is basically going to get pushed to the side unless it has really good terms, maybe pricing, maybe other things that the seller really wants. But it is a lot harder to get an accepted offer, especially when you are competing against other offers in a seller's market. The next option is getting a bridge loan, which is a short-term loan to purchase the new property, getting your down payment in there. And in this option, you can secure the house, sell your current home, and go from there. But one of the cons of the bridge loans, typically you're gonna have some higher fees, some higher interest rates. So that cost to purchase a new home is gonna be elevated a little bit compared to what it would be from just a standard loan. But once you get in the house, you can potentially refi. At that point, depending on when you sell, when you buy, all that kind of stuff, some of the things you need to consider is where interest rates going. Are they going higher? Are they going lower? Am I still comfortable with the payments if they did go a little bit higher during that time? So a few other things you got to consider. And one other option is, can you rent your home? Now there's a lot of pros and cons in that, obviously, but it is always an option. You can potentially take the income from that home and use it for the mortgage payment of your current home. But with all this, there's options depending on which market you're buying a home in, which market you're selling your house in. It can vary depending on where you're going. So always important to keep up with both markets and know what's going on. And if you guys want to keep up with all the markets, everything that's happening right here in San Diego, feel free to follow along. And if you want to start that conversation, hit us up. All of our contact info is right below. Call, text, email, shoot us a DM, whatever it might be. We want to hear from you. We want to start that conversation and start getting that plan together so we can help you out with your real estate needs. And we got your back with making the move here in San Diego.